Welcome back to the channel. In today's video, we're taking a calm, structured, and realistic look at Zcash price action. Because after the recent move off the lows, the market is now entering the phase where clarity matters more than excitement. Strong moves do not end randomly, and they don't reverse without reason. They transition. And understanding those transition phases is what separates disciplined market analysis from emotional decision-making. In the previous Zcash price prediction, we outlined a very clean opportunity near the lower end of the range, and price reacted almost exactly as expected. That move began from the bottom region, where structure, momentum, and risk-to-reward conditions were clearly improving. On December 6th, when Zcash was trading around the 349 level, the expectation was not for immediate weakness, but rather for continuation higher as long as price remained supported above that zone. Even with short-term volatility, the broader setup favored upside, and that scenario ultimately played out. A few days later, on December 10th, price once again presented another technically valid long-side opportunity. These were not random calls or reactionary trades. They were based on structure, confirmation, and patience. What's important to understand here is not the trades themselves, but why those levels mattered. Markets tend to reward areas where downside risk is clearly defined and upside potential remains open. And that's exactly what we saw developing during that period. When price respects prior demand and holds key levels, it often signals that larger participants are still active. Now, with price having already pushed higher and a local high printed, the focus naturally shifts from chasing moves to evaluating what comes next. This is the stage where many traders get emotional, either expecting price to continue indefinitely or assuming an immediate reversal. In reality, markets rarely move in straight lines. After strong upside expansions, it's normal to see pauses, consolidations, or shifts in short-term order flow before the next decision is made. Before we continue, I want to be clear that this content is for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. At the moment, Zcash remains an interesting asset from a structural perspective. While recent price action shows signs of increased selling pressure relative to buying pressure, that alone does not automatically imply weakness. Selling pressure after a strong move can simply represent profit-taking rather than aggressive distribution. To better understand this distinction, it's essential to drill into volume behavior and look at where activity is actually occurring. This is where tools like the volume profile become especially useful. Rather than focusing only on candles, volume allows us to see where the market has accepted value and where participation is thinning out. By narrowing the scope and examining a closer volume profile, we can identify whether current price action is occurring in high-interest areas or in zones where liquidity is beginning to fade. That information helps frame expectations without relying on emotion or bias. So as we wrap this up, the key takeaway here is that Zcash is no longer in the phase where impulsive decisions make sense. The easy part of the move has already happened, and what remains now is a period where structure, volume, and patience matter far more than prediction. Whether price continues higher, consolidates, or pulls back, the market will give confirmation through behavior, not opinions. Going forward, the most important thing to watch is how price reacts around its key levels and whether volume supports acceptance or rejection in those zones. Strong trends are built through phases, and transitions often look confusing before they become clear. That's why staying objective and focusing on what the chart is actually showing is far more important than reacting to headlines or short-term noise. If you found this breakdown helpful, make sure to support the channel so more of this structured, no-hype analysis